Hi guys, Bitcoin BTC update. This is going to go first out to my premium guys, but I'm going to make it free view later. For the free view guys, 13th of March webinar with an offer at the end of it, 7 and 3, 7 mistakes, 3 great gifts. Let's talk about BTC. The rising wedge that we had eventually did us pop out the top. Was a kind of micro little head and shoulders, which didn't actually make its downside target. It had a return move, but it went beyond being just a return move, because in essence, while it never passed this line, I'll show you, I made this in deeper on my drawing actually, but I want to leave it on this level first because of the fibs. It did bump back into the grind line across the top that it just popped out of. So when it ceases to be just a return move if you make a higher point than the last high. But what it was actually doing is just rolling into a rounding top after that rising wedge. So the buying was coming up a bit strong under it. There was some drift selling into that. We had a little bit of a sell-off push and then a final little exhaust up, and then there was then everybody wanted to be in was already back in. It was never a good idea to be buying in here because we were in quite early. We were quite comfy with the rally here. In fact, I thought this would have topped out a little sooner around over here, and in fact it's gone rather high, a bit too high for my liking. There's slight risk of double top in this if it were to go very capitulatively down to this level. So there's lots of potential scenarios in play, but I would still say that's an outside one. I would say broadly this remains a recovery continuation assumption. Once again, that's a probability based assessment. It is not a guarantee. There are no 100% in the game. Mainly I'm saying that because of the impulsiveness and the number of fib stack levels we've run here, which shows that this is more than just a dead cat bounce. There is a new resurgence. Some of that fear of the big sell-off is slowly working itself out, and people are finding it expensive again to be out of the crypto markets. Interesting little point on the fibs though, so let's just do that. So you had a little bit after the sell-off, you had a little bit of a hang on that 76.8, and you're seeing we're getting a bit of a recovery push after touching the 61.8. So that's what I wanted to show you with the fibs. I did do a draw which will hopefully make a little bit more sense. So there's that red line, you pop out the top of the rising wedge. That was our grind line along the bottom. I should put it in as well. And do so that you can see at least the two parameters of it. However, this points also to the HVF rule of marginally higher highs, marginally higher there, marginally higher there. In other words, initially you're making bigger highs and then they slow down. So this orange zone that I'm giving you is what I call the sort of rounding top effect. I haven't drawn it perfectly. I've been playing with the squiggly lines and I've hardly nailed it. And I'm not implying it has to go down to these levels either. It could be more limited downside. The interesting point is your fib levels might steer you though. So you've got a 50% in and around the 10,000, is it 600 level here, just below the 10.6, which could be a point where it starts to get a bit of defense. You also have the 38.2 where we've seen significance here before, there, and there. So we're in a retrace. Now the big thing was we kind of sensed this would happen, but I'd already predetermined what I was going to do, aka I am largely Monero and Bitcoin at the moment. Our premium guys were given the heads up on Monero some while ago. I'll let some details come out now on what we've been doing in the Monero realm as part of a retrospective, but there's still scope for more. Many of you will know that there's a fork coming for Monero V. We don't just buy it because there's a fork coming. There has to be a clear sign of HVF structure, and there was, so we'll do that as a follow-up at a later point. But anyway, so Bitcoin is the key part of this. So there is going to be a sell-off. Now you might say, well, why aren't you just jumping out of all your Bitcoin now and getting it into Tether and buying back more BTC value lower down? And here's the answer. You wear yourself out. You need to preserve yourself in this game. You wear yourself out, especially if you do not have a method by which you can assess how far it'll go down. In other words, what ends up happening is it comes down, down, you're looking very smart, you're playing both directions, and then suddenly it pumps from here. And then you're left out and you're having to buy back in and you're chasing. That disrupts your emotional position. You generally, in these instances, whenever I've looked at them and tried them over 26 years, not just in cryptos, in FX, equities, trying to go in and out, you end up doing yourself damage. You might then say, but hey, what if it keeps on going down and then runs this? The fact that you never got out, you would never have saved yourself if it keeps going down here. Well, there is that slight double top risk, and if it was too capitulative for a sustained period, I would start to consider excuse me, the double top risk as being quite high. However, with this rally on the 61.8, when you compare to this very abrupt selling here, there's nothing too scary yet to be concluded, and we are seeing a little bit of a pushback there. By no means do I suspect that that's the low. In fact, ideally, I would like it to come in and around here to give us something somewhat symmetrical. Maybe top end of the yellow area, bottom of the green would be just fine. The levels there, my eyes are deceiving me here. I got a bit of fever and a bunch of things. I've overrun myself a bit, but probably around the 10.2s. That's at 10.2s. I can just about make it out. $10,200. And then we have a nice structure for further continuation for Bitcoin. So you would have gone up and over, and this has gone from rising wedge with a dip back, with a return move that then went marginally high, but did bounce into the same selling ground line there and is now rolled over. Now this has had some interesting aspects to bear in mind. I've been warning people out of the likes of, on my premium board, we had looked at Nano, we'd looked at Litecoin and a few others, that we would probably see on some BTC retraction. You'd probably see the alts retract harder too. So this still shows to me that BTC is the dominant one. BTC sells off. It sells off at a lower beta than most of the others. So I warned on Missy Go, for example. I warned on one or two others that were in rising wedge structures. And in percentage losses, I would expect you would be harder hurt than in these alts than in others. Some people keep asking for Litecoin. I've warned about this structure with a flat bottom here in our base camp area. So you're seeing all of these now facing a bit of a problem and selling off against the Bitcoin. This was where we were at there in our base camp area, warning that this is a caution. So we've seen, I've put out a lot of cautions on the alts that they won't wear the Bitcoin contraction well. And BCH against the dollar is losing a bit of ground as well. So most of them are not wearing it particularly well. And yeah, that's it. So look for further downside, but I don't expect it to be as abrupt as this. That wasn't too abrupt because it eventually started, in the beginning it was, but then there were some pushbacks and then there were marginally lower lows. So it was convex, or actually I should probably say concave, because it's depending which side you're viewing it from, because the lows got marginally lower and then you got that inverted head and shoulder structure there. Nice with the left shoulder, the head, and the right shoulder, and you pumped right through it, and it overperformed quite nicely. So that was the beginning of those lows. I don't expect it to be that deep or that abrupt or that steep, but we'll have to watch. If it were to be, If it accelerated, for example, here, and came exceedingly deep, then you have to look at the risk of double top. I don't feel that's a high probability at this point, but will change opinion the minute the price behavior gives me anything to believe that that's the case. So I think a dip down to these levels will actually be both healthy and very good for the medium-term upside continuation of BTC. And that BTC will remain probably dominant against most alts, except for exceptional case alts where there's a narrative to go with it that is compelling. Not every narrative will be. And we'll talk more about Monero in another clip. So that's my take on Bitcoin and the cautions on a number of other coins that had lesser rising wedges that were mimicking this. And their percentage losses subsequently, and their higher beta to market contractions. Okay, speak to you all soon, and hope to be in a better condition by then. Okay, thanks for listening. Like and share if it's valuable. And remember the free webinar on 13th of March for those on Freeview. Go to www.themarketsniper.com and get started button and tell us a little bit about yourself. It doesn't suit everybody. Be prepared for an offer. It's for people that are really committed to make an investment in their trading. It's not for everybody. And that's it. Thank you. Enjoy your week ahead.